Hey everyone, welcome back to another episode of AWM Insights. Excuse me, already tripping on my words. I'm your host, Justin Dyer, CIO of AWM Capital, alongside Mena, Hanna, portfolio manager here. We're going to jump right into it today. Kind of doing a free-flowing conversation of a little bit of a spicier topic. It could be, and we'll see where it goes. So, topic of conversation today is: does it make sense to copy the trading activity of politicians? Of course, we're going to start this conversation quite simply and then see where it goes. Let's see what the data says. So Mena, jump right in. When you unpack it all, get beyond the headlines that are often attention grabbing, and especially in this polarized world, what are we actually looking at here? And there's probably a number of ways to slice and dice it.
Yeah, there's a number of ways to look at this. I think it's misrepresented in a lot of settings where you see, Nancy Pelosi is outperforming the S&P 500 since 2020 by 300%. That is a fact, okay? So is there some egregious performance difference? Yes. Now, I just want to put a massive asterisk and caveat and say that there's a caveat there. When you're actually looking at implementing a trading strategy, you kind of have to have all three things, all three main components of what I'm going to go through working in your favor. One, you have to have a strategy that actually makes money, something that, like this, seems to be a winner in the green. The second thing that you have to be able to do is implement it and actually extract the money. In a situation like this, and this is probably something that you'll never hear on the news, politicians can place trades. They only have to report trades in a 45-day window of time. That is light years in the market's eyes. That is a ton of time. And from the point that actually the trades are made to when people find out about them, the stock price has typically changed a lot. There's probably some insider information in trading, and your expected gain is kind of erased. So even though here, we don't even have to get into step 3, but even though here you do see something that could potentially make money, the way that the system is set up kind of prevents you from being able to extract that value. The last part, I'll just get into it, is this a repeatable process that I actually trust on a go-forward basis? And I would argue in this situation, it's also a no. So a lot there, but this is something that you can't kind of trust your life savings with.
Yeah, and I would even expand on what you're saying a little bit as well. The delay in actual activity to reporting is vast, especially in terms of market. Yes, you're saying in some cases there's evidence of outperformance, but the assumptions there are huge. When did the trade actually happen? It could have happened anytime in that window. So that's number one. And it could go both ways, right? Markets move incredibly fast. And you even look at some of these tracking products today, kind of cutting to somewhat of a punchline. They've actually underperformed. And so it's not just what you're saying, right? Where there's evidence of outperformance. There's evidence of underperformance more broadly speaking. You can, when you take a kind of a wide range of participants, and you look, and it spans political parties, you see some positive performance by someone like Nancy Pelosi over the last 5 years. But if you go to a website, Unusual Whales, who started this conversation really through the end of 2024 over a 1 year period, a 12-month period, there's quite a few Republicans on here as well. So you're gonna, the short of it is you're going to see outliers in a population. We're talking about, I think there's something north of 100 or close to 120 Congress people who actually trade stocks or traded stocks within the last 12 months or 24 months, within the most recent period of time, let's just call it. And you're going to see some who outperform, you're going to see some who underperform. But to your point, is this a strategy that can be replicated accurately going forward? The short answer there is no. There's a number of different reasons for it, right? Whether it's because we're not actually getting good data on what's happening.
It's too late.
It's too late, right? And then you're also the magnitude of the activity is crazy. I've filled these out for clients in the past where you're going through these questionnaires, like you're saying, oh, what was the size of the trade? It's like 1 to 10 million or $1 to $10,000, 20 to 50, right? There's all these crazy ranges. And so how do you actually accurately guess what the weightings of the trading is? It's almost impossible to really do that. Then if you look at more rigorous, I would say academic studies, which I'm kind of referencing in some of these comments, at the end of the day, you look at the population as a whole. I kind of hit on this. The academic studies show they underperform as a group, so it's not wise. But then we can go through the data of the two big ones that are in the market right now.
Yeah, the real life data. So these products, there's a Democrat and Republican ETF, both released in February of 2023. So we've had 2.5 years to see how they've performed. The Democratic one is called Nancy, which is, clever ticker. That has returned 83% over that span of time. The NASDAQ has returned 100%. So it's underperformed by around 17%. And all of the elements that you highlighted around the lag times, as well as also fees, you're paying a lot more for these ETFs than you would be for a standard fund. Those erode your returns. So,
question for you, not to put you on the spot, but I would imagine there's more turnover in these vehicles as well. So tax efficiency is much lower than we would otherwise want. And so not only the outright fees, like the hard fees of the expense ratio and whatnot are higher, but the tax drag is also probably substantially higher when new reports come out, which is, again, degrading fee or degrading performance as well.
Yeah, and you actually probably won't see that in these numbers. You'll see that when you actually end up filing your taxes at the end of the year. So it's an even bigger hit than what we're looking at. So that's that ETF. The GOP ETF, remember the NASDAQ returned 100%, returned 46.7%. So you got less than half the return. There's 53% deviation in performance over this period of time. And it's a big loser. You lost a lot of money if you invested in this ETF thinking that you're going to make money and you're going to outperform the market. Now, this is an argument that I've heard a lot, and it's that, well, you should kind of look at November 1st as a different window, since the House, the Senate, and obviously our president are all on the same political party. So theoretically and conceptually, the GOP ETF should do better. Nope, it's still the worst performing ETF. Over that period of time, it's returned around 6%. The NASDAQ's returned 13.7%. The S&P's returned 8.7%. So even in these shorter windows of time where you do have kind of tailwinds, or what you would think would be tailwinds to help a certain political group outperform, it just does not show up in the dollars and in the data.
Yeah, awesome. Yeah. Well, hopefully this casts some light or sheds some light on this very reasonable question. But look, at the end of the day, when you look at the data, guess what? This does really just prove to become one of those another attention grabbing, headline grabbing type strategy to make companies like Unusual Whales a little bit more money. It becomes an asset gathering game, and you really have to look a layer deeper. Don't let your biases, whether they be on one side of the political spectrum or the other, don't let them influence your long-term discipline, right? What do we say? Vote at the ballot box, not with your portfolio. It's definitely the case here. Look at the data, rigorously understand what's going on, and then, compare it to the tried and true methods of building, compounding long-term multi-generational wealth. And, unfortunately or fortunately, this question, this specific topic is no different.
And just one last thing to add, things change over time. The legislation is probably going to change. We had a situation with the Federal Reserve where trading restrictions were placed on Federal Reserve members, and it's kind of been bounced around that potentially politicians are not going to be able to actually trade in the same ways, or they're going to have more restrictions, which will probably hurt their performance even more. So yeah, when we're thinking about actually building a portfolio that's proven to succeed in different periods of time and also has an ongoing reason for outperformance, you can't really base your investments on something that can change and deviate so drastically based on a changing law or changing sentiment in general. It's a lot more complicated than just copying what everyone else is doing and cashing your check at the bank.
100%. If it sounds too good to be true, it usually is. All right. With that, we'll wrap up. Hopefully this was informative. If you're at all curious, we're happy to go deeper on this topic or others. You can text Mena. He'll give his number in a sec. But yeah, we love the feedback. We love the questions. We love the interaction. So we can talk about things that are both interesting to us, but interesting to you all, our listeners.
Yeah. Shoot me any questions that you might have, if they're political or not political. Happy to field all questions. My number is 626-862-0355.
Yeah. Awesome. Cool. Until next time, own your wealth, make an impact, and always be a pro.